Hello Maverick Traders, this is Imri and I'm back today with another currency recap. Let's get right into it. Okay, so interesting markets we have here. Has the dollar strength finally peaked? Are markets going to break lower? We'll get into all that and more. Okay, so it's been a pretty bloody day for the stock market today. Down, the S&P is down over 2%, world stock index down almost 2%. So the roller coaster continues, right? It looks like we're kind of low basing right now in equities, and we're going to take a look at that. And the dollar is certainly pulling back as well. The question is, how far is it going to pull back, or is this a full-scale reversal in trend? We're going to take a look in a few minutes. So first up, we've got the S&P 500. As you can see here, we're clinging on to support from middle of June, as denoted by that red line coming in around 3640 or so in the S&P 500. The interesting thing I want to point out, by the way, is that the momentum indicators are pretty much as oversold now as they were back in June, and we had one heck of a rally over the summer months. So I'm not saying that we're going to get all the way back over 4,300 in the S&P. I'm not saying that at all. I'm just saying that it is probably worthwhile being a little bit cautious here. I think cautious in all asset classes, cautious in all markets right now, because we could be at a fairly important juncture. Given the technical pattern, like if I'm just looking at the price bars on the chart, kind of looks like a low base. Kind of looks like we might be getting another leg down, but I wouldn't be surprised if we took another run closer towards the moving average, the red moving average there on the price chart before we do break down, right? So I think somewhat sideways action to close out the week is probably a good bet, and then we'll likely get the next leg next week. Total stock market index broke below the July low. And we're kind of basing, kind of the same thing here. Again, wouldn't be surprised if we rallied a little bit given how oversold the short-term technical conditions are. But ultimately, I still, like with the S&P 500, expect another leg lower here. And crypto is very similar. We're just going sideways, looking like a pretty long base. My hunch is that if stocks break down, crypto is going to break as well, and probably break harder. So I don't see any reason to be buying crypto at this juncture. I think we'll have plenty of buying opportunities in the intermediate term future, but for now, just best to let this market do its thing. So market outlook, giving this a solid -2 still. And in terms of news tomorrow, well, we've got a bank holiday in Canada, and we have the consumer price index report coming out tomorrow, consumer expenditures report coming out tomorrow. So that's an inflationary reading, could be a market mover depending on how badly we miss the expected forecast. So it's coming out pretty early in the day, definitely something to keep an eye on. The market's desperate for any signs that inflation is slowing down rapidly. So if we do get a big hint, that consumer expenditure items are peaking in terms of their price increases, then that could weaken the dollar further. Now, in terms of currency analysis, again, cryptos are broadly moving sideways, and despite almost a 2% move as of recording this video in Solana, it's just not that impressive considering how much we've fallen. I don't have too much to say here. I think it's best to stay out of this market, given that Maverick we can only play the long side anyway. It's just best to stay back and watch. On the fiat side, the pound jumped today, clear outperformer, but in the context of its weakness and in the context that nothing's really changed over the last couple of days other than people probably piling on a little bit too deep on the short side on the pound, my hunch is that sterling weakness has not quite peaked yet. My hunch is that this is a bear market rally, but given how far we've dropped, that's a reasonable advance. In fact, I think we could see more upside in the pound, at least in the short term, but I think ultimately it's going to make for a great selling opportunity. All right, so in terms of velocity, I really don't like this velocity chart. It's a bank holiday in Canada tomorrow, so I'm not so keen on trading the Canadian dollar and what's likely to be a less heavy session in terms of volumes and transactions. Yen is weak short term, sure, from a velocity standpoint, and the dollar as well, but given the strong uptrend in the dollar, I don't really feel like shorting the dollar anytime soon right now. I'm more likely to see how this all plays out. Cryptos are all kind of flat from a velocity standpoint, as is the Swiss franc. And then, on the two Europeans, the pound and the euro, those two currencies, they're like, just as an aside, can we still call the pound a European currency after Brexit? So we've got the pound and the euro as a +2, but I mean, those two currencies have been weak for so long. This velocity, bullish short-term velocity, kind of just coincides with what I think will ultimately be bear market rallies. Now, without further ado, let's jump into TradingView and take a look at some of these price charts so I can show you what I mean. So let's kick things off with the dollar. Man, it's kind of cool when you're on a hot streak in terms of your predictions. I think I said that a couple weeks ago, and my hot hand continues. So we've taken out this March 2020 high, the COVID high, as I expected we would in the dollar, and we're now pulling back quite aggressively. I mean, look at that bearish candle formation here. On the weekly chart, it looks quite ominous, and the monthly chart, I guess, doesn't look too bad, but the weekly chart looks really interesting here. If we can get a bearish close to this candle at the end of the week, then yes, there might be room or opportunities to short the dollar next week, right? But for tomorrow, I just want to wait this out. I want to see the market tip its hand and reveal a little bit more of an intermediate term direction. All right. Now I'm speaking to you as predominantly a swing trader. Okay. So if you're really keen on scalping this market, there might be a short-term opportunity available for you tomorrow. It's not my game. So I'll personally be waiting for a little bit more clarity in terms of how deep this pullback in the dollar is likely to go. But yeah, I think the dollar will trade lower heading into next week. Okay, let's move on to the commodity currencies that I'm looking at. So first up, we have the Aussie. So with the Aussie, I said, hey, we really need to keep an eye on this support level right here. And if we break through it, we're likely to test that lower support zone. So we pretty much have tested it. We bounced back up into the prior zone, and we're kind of trading in no man's land. So I don't like it when we're trading between support and resistance areas. It's just not where good trading is typically going to take place. So I really want to see if we can break below this zone, or if it looks like we're going to trade back into this, treat it as resistance, then start breaking down once again. Okay, just wanted to give you an update on the Aussie since I spoke about it the last time that I was doing one of these recaps. Same with the Kiwi, right? I said, hey, we're going to break below this support. We're going to test this supply down here. Got very close to that supply area. I mean, I just kind of drew this box arbitrarily. You can see visually on the chart. Just look at this mess of candles here, right? There's a lot of orders that are placed there, potentially a lot of supply. So no surprise that we're bouncing here, but again, I don't see a reason to buy the Kiwi necessarily, even dropping down to a 1 hour chart. I mean, geez, we haven't even broken this lower high yet. So at minimum, I'd like to see that lower high get broken before we start getting a little more aggressive. Just interestingly, just going back to the dollar, the 200-day moving average comes in quite a bit lower here. If this is an intermediate degree top, then yeah, we're probably looking at about an 8 to 9% decline in this index. Definitely there will be opportunities to short the dollar if that is the case. Okay, so moving on to the euro, look at this. We're trading right around the 200 period moving average, the day moving average. The last time we did that was in June and we sold off sharply. Is that what's going to happen now? Yeah, I think the euro has a little bit more room to strengthen, particularly against the dollar, but ultimately I do expect more euro weakness in the intermediate term. And with the pound, look at this monthly candle. Like that's pretty intense considering we tested this level from 2016 in the basket. Geez, I mean, is this good enough of a reason technically for me to start being bullish on the pound? Absolutely not. I do think the overreaction on the short side was probably a little heavy, right? I do think we did overreact there. But I don't know how much room we have, and I really don't want to be buying a currency where everything is kind of stacked against it. So I'm more liable to see this strength in the pound as temporary. Perhaps we trade back into this resistance zone, perhaps we meet this trend line, but ultimately I'm looking for opportunities to short the pound, not buy the pound until further notice. And then the last currency on tap is the yen. So I said, this is a falling wedge last week. We're going to trade into the supply zone. We're probably going to pull back a little bit. But if this is a falling wedge, then ultimately I expect the next attack at this trend line to successfully break out. And then perhaps we can look for higher in the yen. So, in short term, price action on the yen, yeah, I mean, it's looking pretty heavy. There's certainly a lot of room in terms of momentum, in terms of looking for potential supports in the yen. If I bring up some fib levels, 30.2 is not too far from here, and the 618 is a good distance away. So, if you wanted to be short the yen, taking a look at something like potentially sterling yen, if you really wanted to play something on the short-term side, it's not my trade, all right? I'm just saying, clearly the pound's outperforming right now and the yen's underperforming. That might not be the worst combination to look at if you really wanted to. Okay, so that's it for me, guys. Bottom line, as far as my conclusions go when I'm looking at this currency market, it's to wait. I think we're at interesting junctures right now. I don't think any of the moves we're seeing are really either establishing new trends or reversing old trends. I just think we've moved quite a bit over the last few days, and we need to digest those moves. So if for example, if the pound drops 5% to see a 2.5% rally, which is just 50% back, that's completely normal, right? But in isolation, in a vacuum, that looks like a big move. All right, so that's it for me, guys. Not too much else going on except that 8:30 a.m. Eastern Time PCE report coming out tomorrow. Stay safe out there. Tomorrow's almost certainly not a trading day for me. I'm gonna hopefully I'm hoping that the dust is gonna settle and we get some more clarity heading into next week. All right, so not my most decisive market recap. I'm not clearly saying there's a trend to attack right now. I think tomorrow is more of a day to wait and see and prepare over the weekend for next week ahead. Okay, beginnings of the month tend to present great trading opportunities anyway. So we'll be heading into October as of next week. So that's it for me. Take care, everyone. See you soon.